Global trade at a crossroads, tariffs, tensions, and an uncertain future. Good evening. This is your special report on the escalating global trade tensions that are sending ripples through boardrooms and living rooms across the planet. The United States, under President Donald Trump, has reignited its aggressive tariff strategy, placing unprecedented pressure on economies in Europe and Asia. The question on everyone's mind is, where do we go from here? The current landscape. A web of tariffs just days ago. President Trump made headlines with the announcement of a 30% tariff on virtually all goods from the European Union and Mexico, set to take effect on August 1st. This isn't an isolated incident. It's the latest in a series of moves that have seen the U.S. impose or threaten significant duties on imports from over a dozen nations. We've seen a 25% tax on goods from Japan and South Korea, and a looming 50% levy on copper imports. Even pharmaceuticals could face a staggering 200% tariff. The underlying philosophy, as the president has often stated, is to correct what he perceives as unfair trade imbalances, and in some cases, to address issues like the flow of illicit drugs. But the immediate effect is a surge of uncertainty as businesses scramble to understand how these new costs will impact their bottom lines and ultimately consumer prices. Europe's united and resolute response. Europe has not taken these threats lightly. Response from Brussels has been swift, unified, and deeply concerned. EU trade ministers met just yesterday, unequivocally declaring the 30% tariffs absolutely unacceptable. European Commission President Ursula von der Leyen has reiterated the EU's preference for a negotiated solution, stating, "We have always been clear that we prefer a negotiated solution." In a tangible show of good faith, the EU has delayed its own planned retaliatory tariffs on U.S. steel and aluminum until August 1st, aligning with the U.S.'s implementation date. This buys a critical few weeks for dialogue. However, make no mistake, Europe is not backing down. Maros Sefcovic, the EU's trade representative, revealed that the European Commission has meticulously prepared a second list of countermeasures, targeting approximately 72 billion euros worth of U.S. imports. This is in addition to an earlier package of 21 billion euros in retaliatory tariffs. The message is clear. While the EU seeks dialogue, every instrument remains on the table to restore balance if negotiations fail. Leaders like French President Emmanuel Macron and German Finance Minister Lars Klingbeil have echoed this sentiment, emphasizing the need for serious and solution-oriented negotiations, but also stressing the importance of decisive countermeasures to protect jobs and businesses in Europe should talks collapse. A recent European Central Bank survey even indicated a high willingness among European consumers to switch away from U.S. products in response to tariffs, highlighting a potential long-term shift in consumer behavior. Asia navigates a precarious path across Asia. The landscape is equally complex. China, while seeing a surprising acceleration in exports in June, has still experienced significant declines in exports to the U.S. Beijing and Washington have engaged in preliminary discussions, but no major breakthroughs have emerged. The Trump administration has already hiked tariffs on Chinese imports by 35%, with further increases potentially looming in August. Other Asian economies, particularly allies like Japan and South Korea, are caught in the crossfire. They face the immediate impact of new tariffs and the broader uncertainty caused by U.S. trade policy. The focus for many Asian nations is now on strengthening intra-Asian trade and exploring new partnerships with countries like India and those in Latin America, seeking to diversify their economic reliance away from potentially unstable markets. What lies ahead? A future of uncertainty. The prevailing sentiment among economists and trade experts is one of deep uncertainty and a predicted slowdown in global economic growth. The IMF and WTO have both downgraded their global trade growth forecasts for 2025, with the WTO even anticipating a slight decline in merchandise trade, particularly affecting North America. Here's what we can anticipate in the coming months. Escalation is a real threat. If the current round of negotiations fails to yield a breakthrough, by August 1st, a full-blown trade war appears increasingly likely. This would trigger a cascade of retaliatory tariffs, leading to higher prices for everyday goods, reduced corporate profits, and potential job losses across various sectors. Disruption to global supply chains. Modern supply chains are intricately woven across borders. Tariffs directly threaten this delicate balance, forcing businesses to reevaluate their sourcing and production strategies. This could lead to inefficiencies, increased costs, and ultimately, a less predictable global market. Shifts in trade patterns. Nations and regional blocs will likely intensify their efforts to diversify trade partners. We could see an acceleration of agreements within existing blocs, like the comprehensive CPTPP and RCEP in Asia, as countries seek more reliable and stable trading environments. Economic headwinds. The cumulative effect of increased trade barriers and heightened policy uncertainty is expected to dampen investment and consumption worldwide. Economies deeply integrated into global value chains, such as those in the euro area, are particularly vulnerable to this slowdown. Market volatility. Financial markets abhor uncertainty. Ongoing trade tensions are likely to fuel continued volatility, with unpredictable shifts in stock markets, currency exchange rates, and commodity prices. As the countdown to August 1st continues, the world watches with bated breath. Will diplomacy prevail, leading to a path of negotiation and de-escalation? Or are we on the cusp of a new era of protectionism that could fundamentally reshape the global economy? The answers, it seems, will be written in the coming weeks. Sources and related content.